Yo, what up, everyone? I want to talk about some trading action so far this week and the power of price and volume analysis with supply and demand imbalances and being able to understand market context. In my opinion, those three things are the only things you need to trade successfully. And I will say it hasn't really been the easiest week, and it has been mentally draining on myself, and I'm sure other people will agree. I've had great setups, perfect analysis, but as traders, we're our greatest enemies, and sometimes our emotions cloud our judgments and affect our decisions. So I'm going to go over that in this video, and I'm going to go over a trade that I took along with a trade that I missed and some trades with analysis that we had in my Discord community that some members were able to capitalize on. But before we get into it, I recommend everyone who hasn't followed me on Instagram to follow me at Investortrade. I'm going to post the link in the description below to follow it. On here, I post daily trading recaps along with very good trading tips and tricks that I guarantee you are not going to find anywhere else. Link in the description below. You're definitely missing out if you're not following it. But now let's get right into these lessons. To illustrate the power of both supply demand, price and volume analysis with market context, let's go over both sides of the action on Thursday, January 20th. Now, both the long side and short side plays worked out perfectly. The market gave us tons of different opportunities where us as a trader could find plays intraday that it makes sense from a risk to reward standpoint to get long or short. Just to understand some context, let's go over the pre-market plan. I post these every single day in the Discord, setups I'm watching, levels I'm looking out for, and potential setups that I'm seeing play out in real time. So I will say it's very important. I've made a video about this in the past to come up with your levels of interest. For me, my levels of interest are these supply demand imbalances, and I use market context with price and volume analysis to really gauge how or if I'm going to trade at the areas of interest, aka price imbalances. So the first setup was on the S&P 500 today. We were trying to bounce off of this 4520 demand zone, this first green box up here overnight, trying to bounce up, and we had a little bit of a hard time at this 4551 supply zone. So I was watching both the bull and bear side today, and within the first 30 minutes to 1 hour, I said we're going to have clear direction. For me to be bullish on a move up, I want to see price hold above the 4551 supply zone, create new demand, strong volume above, and longs will be in play targeting the 4588, 4599 supply zone where we found strong sellers from yesterday. So that zone is key. So ideally, again, these are levels of interest, and I see what, if, and how price reacts at these imbalances. So we bounced off demand, larger time frame picture of the market. We have been putting in lower lows. We have been putting in lower highs. And I will say demand zones on first tests have really not been reliable at all. So this is where market context comes into play, seeing what the past did. And if we could put pieces of the puzzle from yesterday's action, the day before, last week's action to give us better picture for the trades we're looking to put on today, then that just adds to the quality scale of potential setups. Demand zones have not been very reliable. They have been bouncing, but for a very short term. And every time we try to move up, the rallies either fail or the rallies actually create new supply on the way up. I said this in one of my videos that recently they've been making the market look, or what looks to be buying, they're on the other side selling, and what looks to be selling, they're on the other side of buying. So that kind of validates the point about every move up we've been seeing looks like buying, but they're really on the other side selling, and rallies have been failing, being met at supply, and we have been selling off from failed rallies. So you add that to the context. We even seen it yesterday see it better on a 1 minute chart where we made a move up inside of supply. This was a trade that I took yesterday. Don't want to get into too much detail with it. Let me just go to a 1 minute chart. Yesterday, inside of supply, every time we moved up, we failed. What looks like buying, they're really on the other side selling. Then the market dumps, especially at side of supply. Then the market rallies again, double tops inside of supply, the market moves back down. We go for it the third time. This did look very bullish. This looked like it was going to break out, and we failed that supply, and I took the market short at this supply zone yesterday on Wednesday, January 19th. So 2 days after you're watching this video. And then the market aggressively sold off from supply, and then that area where they made it look very bullish actually formed a new supply zone. So this is going to be a very important reference area for the following day because of that context, and because of this aggressive sell-off validated that there was actually some selling activity in this area. So now going to a 5-minute chart and showing you Thursday's action. We had this supply zone from the sell-off yesterday that we were actually rejecting right before the market opened up. And that's why in my plan, I was really calling to be bullish above this zone. Ideally, reversals on strong downtrends to the upside, if we're looking to play demand on strong downtrends, they are not going to be very reliable at all. For me to play long on a reversal at demand, I prefer for a higher quality of setup that I will personally take. I want to see a higher low being put in at demand. If we don't get it, I'm not interested. And just like we've been seeing the past couple of days, we've been slicing through demand like it's butter. Been very, very easy. So because we were bouncing at this 40520, it's a very key demand imbalance. I wanted to see price get above the 4551 supply zone and create new demand above, and longs will be in play targeting the 4588 supply zone above. So then the market opened up, and I'm going to go to a 1-minute chart. So the same exact analysis I just showed you about yesterday, what they make buying look like selling, I kind of saw the same thing. So the market rallied into the supply zone, and we actually broke above the pre-market highs, and a failure to stay above that and create new demand above it kind of shows weak longs. However, since we did pull back on this, it kind of validated that area that I said buying looks like selling, selling looks like buying. Then the market pulled back. And what I liked here was this consolidation. So the market pulled down. There were some very aggressive sellers trying to sell down here, and there were also some passive sellers looking to sell at prices a little higher. This is where reading the tape comes into play. So with that analysis, I was speculating. This is where this trade, it could have not worked out in my favor, but do I know any trade that I look to put on, do I know it's going to work out before I put it on? Absolutely not. But as traders, we have to put risk on the table, because if we don't put risk on the table, we're never going to put a trade on, and we're never going to make money and see if our analysis is correct. So the market sold off. I'm not going to lie, this was, in my opinion, a little bit of a premature entry, but I'm okay with entering a little prematurely. Just when the risk is pretty low. So I got long down here at 938. My stop was below this low. So I was risking about 3 or so points. And my ideal target for this trade would have first just to see how we were doing above high a day, and then that 4588 supply zone, like I said in the pre-market plan. So then the next 2-3 minutes, a very aggressive rally. This is something we've seen, we really haven't seen so far this week. This week has been extremely tough. It's been an emotional roller coaster. Definitely has drained a bunch of mental capital, and I won't lie saying it's been easy. Yesterday was a green day, but it was very good analysis, but execution on my end was not the best. And Tuesday was a really not a good day at all. My execution was awful, and my emotions were all over the place. So with that context, and then with this rally, this is something that's been, I guess, with a little bit of a feel aspect to it, seemed a little different than what we've been seeing so far this week. So I was a little confident with this action. The market continued to move up, and then into strength, I like scaling out. So I got long around $2.30 down here on the SPY calls. I exited some into strength at this candle right here at 4560 for a 70-cent gain on the contracts. You trade 10 contracts, you're making $700 in a quick 4 or 5 minute period. But I just scaled out 50% of my position here to protect myself. And with that strong context, this thing did look primed to rip, and we continue to rip. Once this validated that little move up right here, this was actually creating new demand. So like I said in the pre-market plan, I want to see new demand form at supply, because if we create demand inside of supply, that's showing new buyers are finding acceptance at that area of that once we found sellers. Now we're finding buyers. The tide kind of changed. We're seeing different waves, different action than what we've seen in the past. Not only gives it extra conviction, but it also will give us context to take possibly a long trade as long as the risk to reward makes sense and it is in our favor. So now I'm long. This thing starts rallying, and I'm going to go to a 1-minute chart just so you could all see it a little better. As soon as we hit this 4575 area, and I saw that large volume come in about 3 minutes prior to that, I got out my full position at 10 o'clock for $1.45 return on the contracts. Quick 20-minute trade. I'm making $1.40 on my last scale out, which was 10% of my position. $1.45 on the contracts from a $2.30 entry. Very, very good trade. It was stress-free. The market moved up forever. So entry was not the best. It worked out. It could have very well not worked out. Exit, in my opinion, was a little premature. I should have had a little more patience. The trend was still intact. And then this area right here created new demand. So not only are we having demand form in the morning, we're also forming new demand as we move up, which is a bullish sign. You want to see that for price continue to go to the upside. And if we pull back into it, you would want that to hold. Eventually, we rallied perfectly into the supply zone. Awesome trade from this area, straight from the pre-market plan. I know some members got a better exit than me and made over 300% on these contracts. Sick move. I think SPY calls, I'll pull this up here, from our entry. It depends what contracts you trade. Let's just say you got long conservatively, just at this $2.50. These went up 50% in 13 minutes. And by the time we hit supply, these went up over 100%. If you traded different contracts, they would have yielded different percent returns. But that's irrelevant. That's all noise in my opinion. So then we rally into the supply zone. In very weak bearish markets, rallies will fail, and we will continue to put in lower highs, especially at supply. So yesterday, from that supply, like I said, formed after that morning drop, look what happened. We rallied into it, it failed. That just adds on to the context. This drop also created new supply on the way down, which is where we took it long today, or on Thursday. Then we rallied into this key supply zone. This is the same zone that we rejected. Formed supply because of old supply, rejected that supply, created new supply, and sold off. I wish I could sit here and say I capitalized on this downside move. A bunch of members did. I personally was against shorting this strength. This is where emotions kind of lead the way. Everything about this screamed bearish, but I was feeling bullish because I did not want to step in front of this strength. And really, no one knew the velocity of this sell-off today. No one knew that the market was going to rally, 70 points, 60 points inside of supply, and then drop 130 points. If you knew that, DM me, because that would be impossible to know. And the velocity of the sell-off was unreal. I would expect at least demand that formed intraday to hold, but we blew past it like it wasn't even there. And it was a crazy sell-off from this supply zone. I wish I could sit here and say I capitalized on it. I did not play the market to the downside. And that kind of brings into an emotional lesson that you don't have to trade every move. I got a bunch of messages saying, oh, I have extreme FOMO. I didn't capitalize on this put position. Everything aligned. Came into a key supply zone. Stalled out. Put in a lower high. Broke below demand. So everything really was leaning towards the bear side. And a lot of people, even including myself, trying to figure out why I did not short it. And a lot of people had FOMO. The best advice I could give is you do not have to catch every move. The market's going to be here tomorrow. The market's going to be here next week. There's going to be plenty of opportunities. If you don't take a trading setup and you see other people making money off of it, or you see your analysis work out perfectly, good. Use that as fuel for your next trade. But you don't have to catch every move. You don't have to play the market just because we're moving up. And you don't have to play the market just because we're moving down. You have to trade your setups, which are predetermined before the market does open or before price hits your area, and then trade at it and react as a trader to what the market is basically giving us. And SPY puts from that supply, just to illustrate the power of options trading. No one's going to get the high, no one's going to get the low. But let's just be conservative. Let's just say we got short after the demand failed to hold and we found aggressive selling late. Let's just say we got a late entry around 2:30 Eastern. By end of day, these contracts went up to $10 from $3. That's 200%. If we got them at the low, These things went up almost over 400%. A $200 investment, one contract, could have made a $1,000 return from low to high. No one's ever going to get that return, but I'm just illustrating the power of options, especially near end of day, with volatility and with large trading ranges, which why, in my opinion, options are very favorable when there is volatility. So the same analysis on the S&P, it worked out perfectly on the NASDAQ. It really depends on what you see and the best instrument you feel like fits for you. The NASDAQ, the plan was very similar to SPY. We were creating demand and we were rallying inside of supply, which formed yesterday. Any acceptance above that supply, new demand created above 1517 or 15157. I'm open to playing calls, targeting first the 15270 area and then 15314 key supply. If the market falls below 15042 and 1500, this sets up for a possible sell-off, and I will update the plan if the context is weak. So just like the S&P, we had supply in this case. If we got above this supply area right here and we created demand inside of it, all doors are open to rally inside of the supply that we found sellers at yesterday. It's all about context. If you were watching the action yesterday, there was some heavy selling activity. Not only could we see it from the chart, but we could also see it when this rally failed that side of supply. NASDAQ created demand inside of supply, very, very bullish. You could look to take the market long, hold the trend, and then this thing hit supply perfectly, sold off from that supply zone, the same exact zone which rejected yesterday. It's the same exact one. It's obviously very key and important, an area that sellers are present, and sold off below a bunch of demand zones. So everything that we are below, we could remove. And this, in my opinion, sets up the market very well for setups coming next week. And on that note, I'm going to end the video here. If you learned something, drop a like on this video, comment if you have any questions, and definitely check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra charge. I just added a full tape reading section to the videos, and prices may increase soon. But on that note, peace out.